Go to my website, get on my mailing list. If you're not already, I will send you a free copy of the video version of this. That's the best tutorial you'll see. Now, we always need to come up with investment themes based on the big picture. And in our lifetimes right now, there are a couple of things happening in the recent past that most have never lived through at all. Some of us that are older haven't lived through in a long time. The first is the great stagflation. In the last few years, we've seen consumer and producer prices go up at a higher rate than we've seen in some 40 years. The second thing that goes along with this, especially where the new fangs are concerned, and again, most of these are commodity related stories, none of us alive today has ever existed in a world that did not revolve by and large around the United States of America. The US of A has been the world's hegemon since the end of the Second World War. The US dollar has been the world's reserve currency since the end of the Second World War. Pretty much what we say goes in the world. And if you're a small country, you don't like to follow orders, we'll assassinate you or bomb you into oblivion and find somebody who will follow orders. Okay, this has been going on for 70, 80 years, and it's changing. Long before Donald Trump came into office, even the first time, let alone the second time. A lot of these trends were already underway for a whole variety of reasons, away from globalization. And where it comes to commodities and investment themes around them, this, as I said, has led to what I call a World War III over commodities. Most of this is based these days on the conflict, trade-wise and otherwise, between the U.S. and China. And of course, over time, China was built by the U.S. chiefly, U.S. corporations, by Wall Street and so forth, into the low-cost manufacturing center and mercantilist outpost of a lot of these big Western corporations. So as I shared earlier today on social media, when you see these things about China stole our jobs, China did this, China did that, China was nothing until it was enabled to be something major by Western money and Western corporations. And now that relationship is getting fraught. China wants to be a renewed empire again in its own right and under its own terms. Its creator, Dr. Frankenstein, if you will, the U.S. generally, and or specifically rather, the West generally doesn't like that. And that's led to a whole lot of problems that we have in the world today. The war with, as I said before I started the slides, the proxy war with Russia, which is a very dangerous place. Again, I hope that cooler heads end up prevailing. But Russia, another major adversary of the West, regrettably, for a long time now, is warning that the more that the U.S. and the West try and push their weight, the faster the world is going to unravel, and we're going to go to the multipolar world of the future. That, of course, to some extent involves this whole BRICS movement, which in a lot of respects has been overrated. Don't hold your breath for any actual BRICS central bank or overall BRICS currency. Most of us, myself included, probably won't live to see something like that. But what we're already seeing is a move on the part of a lot of these nations to do business away from the U.S. and or the U.S. dollar. They're starting to look out for number one. They're not taking orders from the U.S. anymore, and that is going to make commodities more scarce, all else being equal, for the U.S. and some other Western nations, and over time it's going to make them more expensive. One of my hobby horses in the recent past when it comes to the discussion of commodities and energy is that a lot of companies, the people who do IR for them, meaning investor relations, carry water for them otherwise and so forth, they've made the mistake in the last few years or so of boiling this all down into just the so-called energy transition, or even more so the green transition. When the fact is that as time goes on, the world needs ever more of all forms of energy. There is an addition to global energy demand of all kinds going on. If you're talking copper and nickel, for example, it's not just EVs and EV batteries, it's construction and so forth. 2 billion people on this planet can't flip a light switch. They need infrastructure in their villages and countries. A lot of people in the rest of the world, those same people, they're cooking their dinner tonight over dried cow dung or something similar. There's a lot of demand, and this chart is one of the best ones you can see that explains that over time, as the global population has grown and technology has gotten better and more demanding, the demand for all forms of energy has done nothing but go from the lower left to the upper right. Nothing's going to change that unless we have an epic global depression or something of that nature. Now, the new fangs, what do they mean? Again, the old fangs, of course, were Facebook, Apple, Amazon, Netflix, and Google. The new fangs are fuels, aerospace and defense themes, agriculture, we all need food and land, nuclear energy, and certain other renewable forms of energy. And then the G, of course, stands for gold and other metals and minerals. And what most of these commodity themes have in common, and the reason why, and there's differences between one to the next, and so you can't paint them all with the same brush right now. But generally speaking, you've got years of underdevelopment and underinvestment. There's just not enough of most things to go around. There's scarcity to the point of crisis, or more so, as we've seen with some of the recent embargoes by China against the U.S. in particular. You know, they can keep antimony away from us, some rare earth magnets and things like that. We don't have them. We don't produce them. There's been a lot of policy errors on the part of government, just a lot of idiocy, the sins of omission and commission. We've got war, we've got sanctions, we've got the unraveling of the post World War II monetary order. That's a huge story that's going to affect all of this and more. It already is. Resource nationalism, where the U.S. and maybe to a lesser extent, but still in the same boat, Canada, we're in a mess because it wasn't just sneakers and t-shirts and Christmas toys and electronics that we outsourced in recent decades to China and to other low wage and low cost countries. It was all the rest of this stuff. So we're starting from way behind in this new global commodity and currency war. So we'll start with that for a minute. Fuels, the fuels part of the new fangs. Of course, we had the administration from 2021 until the end of last year that was very ideological. There was no sound economic policy when it came to energy. It was ideology. It was let's build a green economy. We didn't care how it happened. And in fact, along the way, I would regularly point out that Janet Yellen, the Treasury Secretary, was the first Treasury Secretary ever that got her job not based on her financial acumen, which leaves a lot to be desired, but because of her position on a global green energy type think tank that was all about trying to do away with fossil fuels. They, of course, were aided and abetted by all manner of celebrities along the way. You know, the great Greta Thunberg here, I'm ready for my close-up, Mr. DeMille. These things are all photo ops. A lot of these things are staged to try and whip up idiotic sentiment on a part of populations against our own interests. We need fuel. You know, sure, we can do a lot better with what we do. The U.S. especially is a gluttonous country in the way we consume energy. Less than 5% of the world's population, we consume 25% or so of the world's energy. No question, a lot of that's got to change. But if what you're worried about is the climate, we do way better than China. I'll believe in Greta and some of these other people when they're in China in the streets protesting. Probably won't see them again if they did that. Here's what's interesting, though. Under this Biden administration, guess what happened to U.S. oil production? It hit a new all-time record. We were around 13.5 million barrels a day about a year or so ago before it started to flatten out. That wasn't supposed to happen, but it did. I guess the market works to some extent after all. At the same time, he made hash, as I'll talk about a little bit later, of his favored policy vehicle of electric vehicles. He has single-handedly wrecked the EV industry in this country, not because EVs are bad things. I've not spoken to a single person, for example, who owns a Tesla, doesn't like it. Rivian even better if you like a truck. But the fact is that a lot of the building blocks and pieces that needed to be put in place for that industry to flourish, at least in the U.S., Never was. And so now that industry in the US is paying the price for that. Now we've replaced Biden with the apparent polar opposite, who said he's going to double production, reduce cost by 50%, and so forth. But guess what's happening in the first few months of Trump 2.0? The flattening out and nascent decline in oil production is now starting to accelerate. And to a man, to a company, even the company that gave President Trump his energy secretary, Chris Wright, if you go back and read Liberty Energy's annual report ending up 2024, they, Diamondback, high profile comments recently, and others will tell you unanimously that you can forget all about increasing production until the price of oil recovers meaningfully. No one's going to fall on their sword and be patriotic and lose them and their shareholders' money to keep President Trump's campaign promise. So he has already put in a variety of ways. It wasn't just him. I don't want to be too unfair, but there is no way we're going to see oil production recover right away. And that, in the end, is going to correct this decline we've seen in oil prices. Natural gas is one of my three favorite commodities. The other two are uranium and gold that I'm going to talk about as we go along. Natural gas peaked a few different times back at the beginning of the Ukraine war. As recently as a year ago, it hit a 30-year low, well under $2 an MCF. It's recovered recently, and the fundamentals and stars are aligned as they haven't been in a long time, I think, long term for natural gas. So it's one of my favorite stories. Right now, we really haven't seen, although we have had a nice stutter step recovery from those ridiculous lows of 2024, we are still well below the recent highs. And most analysts, and I agree with them, think that long term, when you look at global demand, the fact that the oil production decline in the US is going to likewise take natural gas production down somewhat with it. I think we're going to be in a $6 or $7 area for natural gas as kind of a baseline within another year or two when this all settles out. So it's a very, very actionable place for an investor today. So that's the fuels part of it. I want to spend a few minutes on aerospace and defense. There's a lot of substances involved in this. That's why I've referred to some of these commodity things going on in the recent past in the terms of a World War III over these commodities. There's all kinds of things that we need for guidance systems, for communications, a whole matter of stuff. There's a lot of things that fall under this. It's not just that President Trump wants to have the first $1 trillion defense budget ever in U.S. history. It's not just that he and his people are browbeating, whether it's the European allies or this last weekend, browbeating the Asia Pacific nations that you're not spending enough to enrich the military industrial complex. Sad truth is, folks, that that's the mentality we have running most countries, including the ones that count the most, unfortunately. So there's a lot of money to be made in defense. If you're like me and you don't like that, and you want to look at other areas, here again, a lot of these commodity stories dovetail into defense capabilities, embargoes, and things like that. China, of course, is dominant on a lot of production in the world on a lot of these things, not just the least of which is rare earths. Those of you who have followed the news in the last few days with, the truce purportedly that we saw struck between the U.S. and China not that many days ago is unraveling. And according to President Trump, it's largely because he demanded that China lift its embargo of rare earth element products of various kinds of antimony and things like that. And China allegedly is refusing to do that. They know who's got the upper hand on this. Another theme that I have personally re-embraced and have already started to make some new recommendations in the recent past is cybersecurity. This is an area where, look, and I've said this for a long time, if just for sake of discussion, China decided that they wanted to have a more aggressive war against the U.S., they don't need to ship troops across the ocean. All they need to do is shut down part of our power grid. They can attack different things. Interesting story, a CEO of a company that's going to be my next edition on my recommended list imminently. I was visiting with him last week, and he sent me a couple links to TV interviews he did with media in Abilene, Texas, because just recently in Abilene, Texas, there was a major attack against the city itself, their data systems and things like that. And you might ask, well, what in the world does Abilene, Texas have to do with it? Is that a defense place? Well, roll your memory banks back a few months to right after the inauguration, and President Trump is in the Oval Office with Larry Ellison and a couple other people talking about this big $500 billion promised investment to make the U.S. AI industry, artificial intelligence industry, the biggest in the world. Stargate, I believe, is the name of the project. Guess where the first headquarters is for Stargate? Abilene, Texas. So these things are also on the table when it comes to cybersecurity. If you've not seen this before, you need to look it up. If you don't have the link or the energy to look it up, drop me a line. I'll get it for you. But a very dear friend of mine, colleague for a lot of years, David Tice, once upon a time the manager of the old Prudent Bear Mutual Fund, out of his own pocket, he financed a documentary, which if you've not watched it, you must watch this. It will give you a whole new perspective on exactly where the U.S. is vulnerable and where we will be attacked if and when the time comes that some bad actor has just had enough and wants to really knock the U.S. down a couple pegs. It's not going to be nuclear bombers. It's not going to be Chinese troops or Russian troops. Not going to be North Korean troops. It's going to be that you're going to get up out of bed one morning and we're going to have no communication. We're going to have no bank accounts. We're going to have no gas pumps, no grocery stores, no nothing. And it's shockingly easy. And it's happened in isolated instances all along. This is not a well enough covered story. And if any of you are big into letter writing to your members of Congress or senators, let alone to the president, say, hey, why don't you find some room in that $1 trillion military budget to make it safe for me so that some bad actor can't hit the local utility or the local power station or substation and essentially interrupt our entire way of life and the things we're dependent on. That's another part of aerospace and defense and so forth. Needless to say, among my recommendations in a national investor, a lot of these themes are well represented. Agriculture, I'll just spend a minute on. I'm far from an expert on soybeans and coffee and sugar and things like that. But here again, even with foodstuffs and things like that, there's a common denominator, and that is shortages, precarious supplies. We learned a lot about this during COVID. In fact, this particular slide is from stores in Germany where you had rationing because supplies of things weren't moving. We could see that again. The biggie, in my opinion, as far as an investment theme, and there are a lot of good options about this. I've personally been familiar with an outfit based in the Chicagoland area for several years now. I'm not afraid to give you their name, Iroquois Valley Farms. Look them up. They, for years now, have put together investment partnerships based on buying up largely organic farms in different parts of America. They've been extremely successful over the years, very solid returns, very solid underwriting. And just like Gerald O'Hara told his daughter, land is, they're not making any more of it. There are public companies out there where you can invest in land. It's not a mistake that Bill Gates, as a lot of you have heard, of course, is a big owner of U.S. farmland. Nuclear energy, look, we were lucky enough or smart enough for both to a few years ago get in the first wave of the new secular bull market for uranium and nuclear energy. We saw the uranium price bottom at well under $20 a pound on the spot market. It went up to well over $100 a pound, and for about the last year and a half has been correcting, but we're starting to see the turn come again. And I said back before all of this started, I've got a great cartoonist over the years. This is one that was inspired by a friend of mine who's a uranium company executive, because I told him, I said, I've always told the story about when generalist investors wake up every now and then to the idea that they need to be in gold and that type of thing. It's like a 300-pound man jumping into a kiddie-sized wading pool. But when it comes to the nuclear space, it's going to be like an elephant jumping into a kiddie-sized wading pool. We've seen the first fruits of that already. Act two, I'm very convinced, is going to start imminently. This is one area in which President Trump is also looking to try and jumpstart things. He had a series of executive orders a week ago on everything from enrichment to mining to so forth. A lot of it's easier said than done. A lot of work is to be done. But one of the reasons why, folks, that this is the single best setup in the world of any commodity is that there is almost unanimity behind the understanding, finally, that for a world that needs ever more 24/7 baseline power, and it needs to be, it can't be fickle like solar and wind power can be and have all of the other moving parts that may not always be there when you need them. Everybody is embracing nuclear. Germany recently has dropped its opposition in the EU to new nuclear facilities within the EU. Inevitably, Germany will have to run up the white flag and admit to the world how moronic it was to shut down their nuclear industry, thinking of virtue signaling, and yet strip mine a whole damn town to mine coal. I mean, how stupid can you get? Even Greta called that out and said, if I got to have my choice between coal and nuclear, let's build nuclear again. So over the last few years, I alluded to this a few minutes ago. Here's charts, Uranium Energy Corporation. Great chart. It's been kind of going sideways erratically for a while, but a great run if you got in early on here. Energy Fuels, another one. They just had a couple of important corporate events happen for them, mostly deal with the Navajo Nation down in the Four Corners area of the U.S. That's also a rare earth story, which a lot of people don't understand. This is the one that, look, I have winners and losers, folks. I don't pretend to get them all right, but this is one of the most satisfying ones I've had in a long time because I implored people a while back to buy shares in a company called Fluor. Symbol is FLR on a New York Stock Exchange. The stock was $9, $10. Nobody wanted it. Uh, Not very strong earnings. They're an industrial and infrastructure conglomerate, but one of their assets was that they owned all the technology for a company called NuScale Power, which in a few key ways is the farthest advanced SMR technology in the United States. There's others that are catching up, others will go to market. No one is farther along in the approval process with the NRC and others than NuScale is. So I told people that this is the key reason you want to buy Fluor. A while back, they spun out roughly half of the company. I don't know what the exact number is these days, but about half of the company they spun out and made it public. The stock was as low as $2 after that. They've had big losses going on because they've been in research, but now they're moving toward commercialization. And as you can see here, from a low around $2 when nobody wanted this thing a year and a half ago, recently we've been up around 30. Uh, I have to say we've taken some of the money back off the table when you see that first peak there toward the end of last year. But we've still got a lot of the profits that we're riding. We're letting the house's money stay on the table because this is going to be a company and a technology that is going to transform energy the world over. And I mean small modular reactors. The uranium market itself, I believe, is going to recover substantially. There is, and this is from Blue Sky Uranium. Really, it's Blue Sky is the only pure junior explorer on my list. Everything else is the big names, the ETFs. There's a lot of unique reasons why I like Blue Sky, which is a story for another day. Or if you go to my YouTube channel here, I'll post my newest interview with their CEO imminently. But this slide is repeated by everybody that's in the uranium business. There is a yawning gap that's only going to get bigger going forward between the expected production of uranium, which isn't keeping up, and the demand, which just keeps growing. I mean, who would ever thought that 3 Mile Island, one of its reactors that wasn't damaged back in the 70s, would ever be back in business? But it is. So this is a huge story. This uranium price chart, if you go back to the 2007 time frame or so, when all commodities were going parabolic before everything imploded in 2008, that was a major high for uranium. We started to head back in that direction in 2011. Then Fukushima happened. We were in the wilderness for several years. But again, from around 2020 time frame, maybe a little bit before that, up until late 2023, early last year. We got a little bit over $100 a pound on a spot price. It's fluttered down since then. We were actually, this chart is slightly dated, in the mid 60s for a while, but now we're north of 70 again. And I'm here to tell you, and remember where you heard it, that inside of a couple of years from now, you will see a price peak that exceeds that of 2007. So place your bets, folks. Finally, the G in the new fangs, gold and other various metals and so forth. Of course, the story of gold, since the U.S. led the world into a pure fiat currency regimen back in 1971, has been that gold has gone up in value, not because it's dearer, but because fiat currencies become increasingly worthless. And back in the 70s, it was unique to the US. Since that time, everybody has joined in, and it's been this round robin race to the bottom tag team kind of thing to see who can debauch their currency the fastest, which now everybody is in on that act in one way or the other. Big part of the gold story, of course, in recent years is that physical gold has moved from west to east. That has led to a major breakout in the gold price as the implications of coming to the end game of a lot of this currency debasing and especially financial repression is really near, it's nearing its raising its head now. I'm going to have to stop in just a second, but we're almost done. Um, we have seen the near implosion recently of Japan's bond market, interest rates, and the bond market vigilantes misbehaving in the U.S. To the consternation of the Trump administration, which can't understand why the Fed won't lower rates. Well, I'll give you 37 trillion reasons and counting. If they want to sell all the paper to come, they're going to have to keep interest rates higher. They're going to have to keep increasing the monetary base. This is not going to end well. And for those of you that weren't on right away before I started these slides, what's different today with what's going on foreign policy and geopolitical wise to 2022 when Russia invaded Ukraine and oil and gas went nuts, but gold was relatively subdued. Well, it's not relatively subdued anymore because gold, more than any other commodity, smells the end of financial repression and the coming reset of some kind. Now, here again, like I said earlier in relation to gold, there's a lot of nonsense out there about it, the Great Reset, but there's no question that there's a monetary earthquake, an economic earthquake coming that's going to upset the apple cart in the world. And gold, more than any other commodity, is smelling that the jig is up as far as continually it adding to debts and playing extend and pretend and so forth. Base metals are in no man's land right now. I mentioned earlier that the last president, Biden, didn't do himself any favors by saying that, well, I want EVs, but I don't want mining in the U.S. Kind of like as a pharaoh, you can have EVs, you can't have any materials, but your tally of EVs shall not diminish. All right, well, that caused price spikes and shortages, which undermined his EV industry, and now they're both in a mess, and that's going to take a while to sort out. Copper by right should be $8 or $10 a pound today. It's a little bit south of $5, and I wouldn't want to be making major bets on copper quite yet in a big way, except with a small handful of stories, but it's going to have a good day. Jeff Curry, one of the smartest commodity gurus out there, has talked about how today, contrary to the 70s, when a lot of commodities went up in price just over the cheap dollars out then, today it's a much different story. There's shortages, there's growing global demand. There's underinvestment, like I've said. This is another slide, and especially in the West, here in the U.S. and Canada, we're in a fix. I mean, one example: we're going to have the best policy tailwind we've ever had in the U.S. when it comes to permitting and mining and things like that. Canada, and this is a subject for another day that I'll be talking about shortly, is probably going to be much less bad, if not pretty encouraging in the near term. I think better than the US in some ways when it comes to permitting energy and metals and mining and things like that. but it's hardly going to be enough. On my YouTube channel, look for this. It's a very important, quick 11-minute video that I did for the recent Critical Trends in Mining Finance Conference in New York. Um, there's a lot that needs to be done to make economically possible the things that are going to be slightly better from a permitting standpoint. We're going to see a lot of jockeying for control for partnerships in the world. Anthony Vaccaro, if, those of you that get the Northern Miner, just had a great presentation about that. Again, I mentioned this a minute ago. The President Trump is fighting over these types of things with China. One of the things that he thinks long term is going to be a solution for the U.S. is what the New York Post uh, called the Down Road Doctrine. It was tongue in cheek, but half serious. I think the president and his team realized that long term we need to shore up our hemisphere, not drive people away. That's going to be interesting to see how that evolves. Bottom line, and then we're going to take some questions for all of the reasons and a lot more I didn't have time to give you. We're going to see in the next several years a move from, and I love to use, the old shoe shine boy and taxi driver litmus test. Right now, your taxi driver recently is telling you all about the AI stocks and the meme stocks and the cryptocurrencies he's bought. But down the road, at some point, you're going to see that same taxi driver say, "Hey, did I tell you about all the critical metal stocks I bought?" We're at the beginning of most of these moves, folks. And with that, I'll take some questions, Callie. I hope I didn't belabor people too much.
I personally thought that was great. Adrian has put a couple great questions in the chat.
Okay.
Besides gold producers, who else might be selling gold and why? And then he also asked about, sorry, Adrian, I don't know if it's a he or she. I'm assuming that's rude, but is lithium and nickel plays investable, or is that not worth trying to fight the low prices from China as well?
Good questions, but the first one I didn't quite understand. So who is selling gold now?
Besides gold producers, who else might be selling gold and why? Adrian, do you want to type in if you have a little more details on
Well,
that?
while he's typing, because I don't know if he's asking if there's countries that are selling gold to raise money, or if there's people that are shorting gold in the market, or what the case. So I need a little bit more clarity. But while he's typing in an answer to that, or a question to that, lithium and nickel are going to be in the doghouse for a while. I was on a fast markets webinar last fall, and they were actually fairly constructive on nickel. There is finally, the old saying is low prices cure low prices. I alluded to that a few minutes ago with oil. High prices cure high prices. Inevitably, low prices will cure the beatings that lithium and nickel have each taken. If you put a gun on my head and ask me which one I like the best right now as a commodity, it would be nickel as opposed to lithium. That doesn't mean there aren't lithium companies I don't like. There are some decent stories. Thankfully, I had sense, when we had a few early wins in companies like Frontier and Piedmont Lithium, we sold most or all of what we had near the top, all of it now with Piedmont. We've got a little bit of free Frontier left, which is a great project. Just put out a great definitive or bankable feasibility study, but it's going to be a slow recovery. Lithium stories I would stick with would be the better ones that can be recovered by a DLE, direct lithium extraction. Some of the ones that are the lower cost projects. Generally speaking, the strip mines, the clay oriented ones, you stay far away from them. Nickel, there's been some production shut in a couple of different places. And I think that if you believe that we're going to muddle through and not have a major global recession or worse, I think nickel's going to have a reasonably good comeback. So
Okay.
we have clarity on the gold question.
Yes. Any identifiable groups, country retail investors that might be selling gold and why?
For a while, and I used that cartoon earlier, that a lot of Western investors were selling gold. Western banks notoriously sold gold. Most infamously, the Bank of England, 25 years ago, Brown's bottom, as they called it for Gordon Brown, picking the bottom in the market to sell their gold. I don't see a lot of sellers right now, or nothing that I hear of. People who are involved in gold are buying it. It's why the pullbacks in gold have been so shallow. in the recent past when you look at all the macro things going on and the reasons to own gold. So I've not seen any significant announcements of producers that are forward selling it to lock a price in. Everybody wants the upside to gold. I'll give you an example, and a lot of projects, which even at $2,000, which not that long ago, you would have said, "Oh, goody, $2,000! My favorite company is finally going to be able to put their thing in production." How about 3,300? I mean, look at Integra Resources in the recent past. Look at the purchase that they made of that mine in Nevada, Florida Canyon, which for years had one flaw. It was a uniform low grade and the price wasn't high enough. Now the thing's minting money just because the gold price went up. And they certainly don't want to put a cap on that, the last I knew at least. And I don't think any other company does. There's just too many bullish drivers for gold right now. So I don't know of anybody of any significance selling gold. I think what you could see if we see more stress in the global economy and financial stress. And we saw this back in 2008. We've seen it a couple other different times during the European financial crisis. There might be some holders of gold that would be forced to sell it simply to raise money, simply to cover some external debts and so forth. It's easier to do it with paper than it is with gold. But even that I don't see happening right now.
Don has a question as well. With analysts saying that the US dollar can drop another 10% lower in the next 12 months, what do you think we're going to see in that 12-month cycle for gold?
Well, I think gold's going to continue to do well. It's been notable that much of its increase, especially the more explosive moves of the last year or so, occurred until fairly recently, even as the dollar rose. So, as I've said, and you and I had this discussion a while back too, Callie, gold is marching to its own tune right now. I mean, this pat, understanding that gold always has to move inversely to the US dollar. First of all, in recent years, that's not been as true as it was, and it was only the dollar, like back in the 70s, the US dollar, that was being debauched, and gold moved inversely to it. Now everybody is doing it. There's other factors at play. But all things being equal, I certainly don't think that the decline in the U.S. dollar, which I also expect to occur, is necessarily going to be bad for gold. I don't think it'll mean gold in and of itself is going to move higher still. But I do think we're going to move higher. And, one of the other speakers that we had when I was in New York at the SME conference a couple of weeks ago, Mike McGlone, the Bloomberg commodity analyst, I love what he said. He said that you're going to see gold in the S&P 500 meet at 4,000. So the S&P will drop to 4,000 in the environment ahead. Gold will rise to 4,000 an ounce. I think that's a pretty safe bet.
Oh, I love that answer. Do you have, next question, do you have a read on the gold silver ratio being historically wide? I think referring to where we're at, what is it, 100? 100 right
It's
now?
about that. I'm going to annoy some people, but I can't resist this. Okay? To me, right now, the gold to silver ratio is as relevant as the ratio of axle grease to Honey Nut Cheerios, which means not very. Okay? Like it or not, silver is viewed by the markets as much more a base metal and an industrial metal than it is a precious metal. Now, typically in the past, when gold moves and really takes off, inevitably it drags silver with it just because that's what's always happened. But it hasn't happened this time. Gold was $50 at its last peak when, or silver was $50 an ounce at its last peak or thereabouts when gold was just what, half this price, half this level. So it's not automatic. I hate to be the bearer of bad news that silver has to go up to close that gold to silver ratio. The gold to silver ratio by law under U.S. law used to be 16 to 1. That was when they had monetary relevance in the U.S. and none of us was alive when that happened. So look, I choose to look at silver not in relation necessarily to the gold silver ratio and what gold is, but completely independent of that. What is going to cause silver to go up? And just like I said about copper earlier, there's a lot of supply and demand reasons already. Copper should be $8 a pound right now. Silver should be 50 or $70 an ounce right now, but neither one is where I think they should be. So what do I know? All right. At some point, when commodities broaden out, that's going to happen. And I would suggest to you that you want a route for the central banks and the policymakers to keep a cataclysmic great reset from happening, to keep a cataclysmic recession from happening, to find ways and tricks to muddle through and keep economies growing, at least somewhat. Because if that happens, and it's going to happen in an environment of higher intractable inflation, higher interest rates, but at least things will be liquid. And inevitably, when governments have no choice but to do more to try and help boost the economy, it will favor commodities. So you want to root for a scenario where gold stays about where it is, maybe moves up incrementally more, but where some of the fear is gone, where there's policy and other inputs in place to drive more solar panels, to drive more infrastructure, to drive more electrification, to drive more of everything. And then you will finally see the other commodities catch up and maybe even exceed gold's move. That's how I look at silver. I'm very bullish long term on silver. Don't make any mistake. But it's not surprising to me that silver has been a laggard when you look at the reasons why gold has gone up because those reasons have been unique to gold.
All right, we have a lot of uranium fans here, so I feel like we got to go into that more. Another question, any Canadian-based uranium plays that you really like? And then I'm going to add my own personal spin to that. So, where are you looking jurisdiction-wise for uranium? Are you looking more in the US because of Trump? Is Canada still in favor? And then obviously, I think we have to talk a little bit about Australia because the fact that they're actually looking to not just mine it, but maybe actually go have conversations about nuclear, I feel is, important as well.
Yeah, a while back, and if you go to my YouTube channel, it was only 7 weeks or 8 weeks ago, something like that. I think it was the first week of April that I had my latest visit, which I do on a reasonably regular basis with Scott Melby. Scott used to work with Cameco years ago. He is a vice president of UEC. He's president of Uranium Royalty Corporation, or CEO rather. He's president of the Uranium Producers of America, and he's about the smartest guy that you can possibly talk to in the U.S. and among the 3 or 4 smartest guys in the world. And one of the things that he and I discussed, if you go back to my YouTube channel and find our conversation from early April, is that one of the dynamics, and I alluded to this in my slideshow, a great number of commodities, the story will increasingly be that they're going to travel less and less far from home. Russia, China, Kazakhstan, India, the uranium produced in that part of the world, with or without the U.S. legislation last spring to tell you Russia, we're not going to import Russian uranium after 2028. Russia last fall says, well, if you feel that way about it, go to hell. We won't sell you anymore now. And of course, everybody's got to do that for public posturing purposes, but you've got plenty of exceptions and carve outs for U.S. utilities so they don't run out. Okay. But even without that, there is such demand from existing and especially new construction of nuclear facilities the world over that uranium is going to stay close to where it's produced. So we have to look, we meaning, in the US and Canada, we have to look to our hemisphere in the US and Canada. So clearly, Cameco is a Cadillac of a company. I'm not as familiar with some of the Canadian individual plays, but I will say that one of the things that Scott and I talked about early this year is that he mentions a couple of names, which have to confess I forgot, of Canadian companies, I think, in there. But there are a handful of companies that are not producing now, but that are probably going to be in the queue within the next 3 to 5 years. He was far more bullish than me. He's got a better understanding that a lot of the exploration plays, I mentioned Blue Sky during my slideshow, but they're unique because they've already got a ready-made customer in the government of Argentina. That's going to be a great place to look. In fact, there's a couple of countries in South America. Paraguay is a sleeper for uranium. I know of a couple of plays down there. So we want to look in our own hemisphere because, again, as time goes forward, and these things were already trends before a lot of these trade wars and tariff skirmishes and whatnot heated up with Trump 2.0. These were already cast. We're going to see things travel less and less. Do you remember, for instance, Callie and folks out there, the EU 10 or 12 years ago decided that they were going to enact a travel tax so that any company in Europe that was bringing in extracted materials, you paid a higher tax when it came into the country based on how many miles it traveled. Because the idea is that the less distance these commodities travel, the less carbon you're burning in one way or another, and the less of a footprint, environmentally, to extract these materials. And so this is something that was already starting for tax reasons, environmental reasons, and other reasons. So I'm very much in a favor that we need to look to the US and Canada. For a lot of people, they like to stick with the ETFs, URNM, URNJ will give you a good, amalgamation of individual producers, near-term producers. I'm most familiar, I have to confess, with UEC and Energy Fuels here in the US. They're going to be incrementally in the next 4 or 5 years adding thousands of pounds a year to the supply of uranium as they bring back restarted projects. But again, it's gonna be stopgap. There's going to be a lot more than that needs to be done. So I am going to be on the hunt for some other junior stories and some other ones kind of in the middle of the food chain. But aside from those names, Cameco, of course, with for conservative investors, it's been a great one. We sold that near the top recently, but we still have it via the URNM ETF. It's still a great company. It's not a pure play on uranium as much as some others because they're also utility, but a good one. And Westinghouse is going to be a juggernaut going forward. Again, after Cameco had to help save them from bankruptcy a while back.
So Ray brings up a great point. I think we've talked about it a few times offline of history doesn't repeat, but it does rhyme. Bringing up the 2008, and it kind of feels similar right now with the credit crunch and how that's all going to affect commodities coming down the pipeline at the end of this year. I know we've talked a lot about super cycles and commodities. Do you want to just kind of elaborate on that for everyone?
Look, Callie, one of the reasons I've been ambivalent, aside from my three favorites for their own superior stories being gold, uranium, and natural gas. Also, one of the among the metals where you've had one-off stories like titanium, Hyperion X Limited has been a wonderful performer for us, the best titanium story in the world right now. IPX is a symbol. You look at antimony. There are some legit stories and some not so legit stories, in my opinion, among those that have been talked about a lot where antimony is concerned. But there again, that's a commodity where the story has been so acute based on embargoes against the U.S. primarily that you've had a huge run in price and a lot of companies being able to position for that. Those one-off stories aside, I'm ambivalent about the near to medium term simply because of the ever-present danger of another 2008, where no matter how good the story, how good the commodity long term, everything will get hammered if we have a crisis similar to that and everybody's running for the hills and trying to get liquid. The only exception would be I don't think gold would see the percentage sell off it did back then. It could very well go the other way. And this is a very challenging time because, and I remarked on this a minute ago in explaining the kind of environment realistically near term that hopefully we'll still have that would light more of a fire under silver and copper and things like that. Um, we're at the end game for financial repression. I don't think the average person understands that. In the near future, I'm going to be dusting off pretty much my signature essay over the years called Understanding the Game. And it talks about the nuts and bolts of fractional reserve banking and how that is translated in the markets and economies and market behavior. How what used to be the business cycle was replaced by Paul Volcker in the early 80s by a credit cycle, which has gotten ever more stupid with each peak and valley as we've gone along. And look, by rights, when you look at the massive monetary creation of the last few years, I mean, think about it, folks. In the US, Jerome Powell, who's kind of like Jake Blues, if you ever watched the Blues Brothers, he's got the Carrie Fisher pointing a machine gun at his head, or in a cartoon I should have used that. In a cartoon I had my cartoonist do, he's got, Mr. and Mrs. Consumer pointing a gun at his head for causing inflation. Okay. It wasn't me. It was locusts. My suit didn't come back from the cleaners. It was Russian price gouging, the Putin price hike. It was greedy, whatever. Everybody but him. But this same guy who's always trying to figure out how inflation blindsided him, he was the one that signed the checks. He was the one that led the Federal Reserve into creating 30% of all the US dollars ever created in our entire history inside of about 2.5 years. And you don't know where inflation came from? Okay. So by rights, we should have a doozy of a reversal of that at some point. So people who worry about that are quite correct to be worried about it because after such a massive monetary inflation, you've got to have a deflation. And especially now when the tricks that rescued us, I put rescued in quotes, from 2008, they don't work anymore. Ask the Bank of Japan, which is losing control of its bond market even though they own half of it. Ask the Fed recently, which has already had to restart quantitative easing by another name through their open market operations when you've had some of the treasury auctions recently didn't go real well. And this week it's 8 billion here and it's 32 billion there. So the jig is up for financial repression, and it's to the point where, and and it's like, who's the worst offender? Is it the U.S.? Is it China? Is it Europe? Is it whoever? But it is now impacting even the U.S. and it really should be scaring the hell out of the Trump administration and having them wake up to the fact that the market is calling foul on, so far at least, the complete failure of the Republican leadership in the U.S. to do anything to rein in the debt. And when you start a process, Callie and folks, and if you're some of my fellow U.S. citizens, when you start a process from having 36 trillion in debt and the baseline that they're using in their budget negotiations is we're going to add 20 trillion more to it in the next 10 years. So the baseline is we're going to have a $56 trillion debt 10 years from now. And we're going to go from that number and say, oh, looky here. We figured out how to reduce 1.4 trillion of that. Get the hell out of here. Tell us another one. But that's what they're doing, and that's what they always do. Okay, but that's not going to work anymore unless the U.S. going forward wants to pay, forget about 4.5% or 5% for 30-year paper. The market's going to want 7 or 8 or 10, and not just from the U.S. but from everybody. Because in the end, the only way you avoid another 2008 to at least some extent, and the only way you quote pay off or service, you can forget paying it off, service this debt, is with everybody just inflating the hell out of their of things. And that's going to be one of the reasons going forward that undergirds commodities too.
We have
Is that enough of
another.
a political sermonette?
I liked it. We have another question from Jason, and I think it kind of ties in. When we're looking at publicly listed companies, whether they're gold or silver ones, what are you looking at? Are you looking at exploration, near-term producers? Like, do you have a jurisdiction that you're really keeping an eye on with all these uncertainties happening?
I'm sticking to this hemisphere, like I said earlier, for a lot of reasons, because I think that's where our fate is going to come increasingly in the years ahead, where both the US and Canada are concerned, and our other neighbors in both North America and South America. That's first off. Secondly, I like a lot of the near-term producers. You want to ask yourself, as generalist investors, and I'll tell you what's exciting, Callie. The overwhelming majority of this move in the gold price to its recent high around $3,500 an ounce occurred with zero help from US and Western retail investors. And that's remarkable. Most investment houses have ignored gold. Only in the last couple of quarters have you started to see some modest net buying again of ETFs and that kind of thing. So going forward, I think that a healthy thing that we've already seen and we'll see more of, even if gold continues to rise, is that investors are probably going to be more discerning when it comes to individual stories. And the lifestyle companies aren't going to get the time of day. They can't raise money anymore. The good stories, there's all kinds of money for them out there. So the first thing I look at is who has no problem raising money, whether it's a story or a management team or both. What is there out there that's going to represent a quantum increase or improvement in a story, a massive increase in a resource with great economics? Where is a new discovery coming from? As I mentioned earlier with Integra, what is the impact of a $3,000 gold price on a company that was ho hum at 2,000 or even 2,500, but now all of a sudden, now all the extra 500 or 1,000 an ounce is gravy? Okay. Look for those kind of stories out there. And in some cases, those kind of stories are being well rewarded. Look at US Gold, which is part copper and part gold story. But a project with as sound an economic profile as anything you can possibly find, even when they updated recently their economic study, they still lowball everything and it still looks great. And they're in a great jurisdiction, Wyoming, where it's virtually all state permitting and the feds aren't involved. So you want to look at a lot of things like that. I have to say, I still like South America. I love Argentina. It's a very actionable jurisdiction. I'm warming back up to Ecuador. I was a first mover in Ecuador about 10 or 12 years ago, and no one was paying any attention to it at all. We made a lot of early money. I'm down to two small cap, very small cap companies there now, but about to start loading back up again because I think they're turning a corner as far as all the narco violence and stuff in the country. And they just reelected, by all appearances, a very good president. He got reelected by a very substantial margin. And he's going to do for Ecuador, I think. It's going to be messy, but he's got some help from the US as well. He's going to do for Ecuador, I hope, what Bukele did for El Salvador in the last several years. And that will make Ecuador a great jurisdiction again because some of the most spectacular geology I've seen in North America and South America is down there.
Dave has a question as well of you think zinc will run when copper moves higher?
I think zinc is, yeah, I don't know what to say to compare the two of them. Again, I think zinc is a great long-term story. There's shortages. We don't have any production or refining of it in the U.S. and very little production. That's one of many, many things that we're short on. One of my good base metal picks of the recent past has been Fireweed Metals, which has a monstrous whack of zinc and tungsten up in the Yukon and Northwest Territories, up in that area of Canada. They've been treated very nicely in the market. Look, I'm bullish zinc. I'm bullish on all these metals longer term, but again, with the caveat that near term, a lot of it's going to depend on whether we have a valley to go through first, like what we had in 2008, the immediate aftermath, before all the central banks get together and say, okay, we'll add another zero to the next QE program and reinflate everything. And that's when you back up the truck and buy all commodities, if we see something like that happen.
Well, that would be fun if that actually did happen.
Well, I don't want to have the fun of the crash. I hope that these idiots that work the whole world into this mess find a way to at least muddle out and extricate us with less pain than that. But who knows?
Another question, obvious ways to play the agriculture theme, fertilizer as an example. I'm assuming we're talking possibly about potash then, if you want to go into that a little bit as well, of what you're
I
seeing.
am not as up to speed as I should be on some of those fertilizer stories. I am following a tiny story here in the US with phosphate that I think is interesting. Natural gas is an element, the price driver cost wise of the fertilizers. So I'm a little bit concerned about my bullishness of natural gas increasing the cost of fertilizers, driving some more smaller operations out of business. There's a lot of moving parts there. So there's probably smarter people with some of these nuances that you can have on than me to go into the current dynamics of some of these things. I have to confess.
Chris, do you want to just talk a little bit about your options that you have on your website again to reiterate to everyone here of how they can sign up and connect with you as well? I posted it in the chat that they can reach out on
Well,
Twitter.
sure. I mean, for people like everybody does these days, we are inundated with information. I started doing this over 40 years ago, and the newsletter industry has completely changed. I still have some of the hard copies of my old newsletters that in the earliest days were kind of cut and paste and mimeographed, and they got better and sharper. And of course, hardly anybody puts out a physical one anymore. It's all done by email. Um, but with that plethora of information, as I alluded to at the beginning, you get lost in this stuff, and it's like, what is actionable, what's not, what's legit, what's not, and that's why I always try and sell myself, if you will, by saying that I distinguish between information, which we're swimming in, and knowledge, which few people bring to the table. And it's not because I'm so smart, but it's because I think outside the box and I don't start out with a preconceived notion. I'm like Sherlock Holmes. I look at the evidence and follow where the evidence leads. So for those that are completely unfamiliar with me, if you want, go to my website, sign up for my free email list. That'll get you a lot of macro stuff and so forth. Shortly after that, you'll get a special offer to subscribe and become a member and get all of my recommendations at a discount. So you would get that automatically a couple of days after you sign up for my email for my free email list. But that's kind of like what everybody does these days, and it's not just in our industry, Callie, it's with all kinds of products. It's a puppy dog approach. If I put this cute little puppy dog in your hands, oh, what? The free trial's over? No, how much is the puppy going to cost? So that's how everybody does things, including me. So lots of stuff will give you a flavor for what I'm doing and how I see things, and I call things as I see them. I tell people politically that I've been telling people for a while that watch this Trump and Carney thing. It's going to surprise you. I did not always repeat the things about Carney that some did, nor do I repeat the things that are some people's pat understandings of Trump, because Trump has been dealt, first of all, when he came into office here in the US, as lousy a hand as you can possibly inherit economically, as far as trying to recover from how much damage Biden did to our extractive industries. But I have to tell you, there's been a lot of premature celebrating just over a few executive orders trying to streamline permitting. And again, bully for him and for Doug Burgum and Chris Wright and everybody else that's going to be enabling a much better permitting environment. But we still have got a mess in the U.S. and in Canada when it comes to making us economical. The nickel was mentioned earlier, and I love using this as an example because I've been very close to nickel projects in both the U.S. and Canada. You can have all the permitting reform you want, but there is not a single development stage project in the US or Canada that would be economic today at today's global nickel price. What are we doing about that? That's the next question policymakers need to answer. Are we going to be serious and put the economics and pricing and other things into place with permitting reform so that the US and Canada can truly be more self-sufficient? Because if we're not, then like I said in my video that I'll make available to you if you ask for it, on this whole thing that I delivered to the New York conference, then in Canada and the US, we should shut up, stop our virtue signaling, hold our noses, and buy the dirty nickel from Indonesia. Because if all we're going to do is talk about price and labor, we cannot compete. We need to rebuild labor forces. We need to rebuild supply chains, all of these things. There's monstrous challenges that we have. Look, I think at a gut level, President Trump is on the right track with a lot of what he wants to do, but I think that he regularly fails to understand all the pieces that need to be put in place and all the things against him to get to that end. In Canada, I am suddenly far more optimistic about the permitting and extractive industry environments up there.
All right. Do we have time for one more question before we close this off, Chris?
I'm here for as long as you want. I've got a hard stop at the bottom of the hour, a phone call with a CEO of a biotech, or actually not the CEO, CEO's helper at a biotech company. I told him to call me at 6:30. So
Okay. What are the great question. What are the key factors to consider when evaluating the long-term growth potential and risks of investing in a specific mining company? Would it be the resource quality, production costs, geopolitical risks, and commodity price trends, or you use a little bit of all of that?
I think it's a little bit of all of that, but one of my favorite themes is you bet on a jockey. And you want to look for management where it's not their first rodeo, where they've got a track record of success and more so not just burning up shareholder money just for the sake of burning it up. That's a big element, I think, of all of this too, Callie. But yeah, jurisdiction's a big thing. And look, there's a lot of stuff. We had a couple of great workshops in New York at the SMEs conference that I was just at. I alluded to that a few minutes ago, and one of them especially was a workshop on the first day that was more a hands-on thing. And this was not an investor conference. This was for analysts, for people in extractive industries, public policy people. We had people from the federal government in the US. We had people from the provincial governments of both Quebec and Ontario there. And this is a roll up your sleeves and let's get serious and figure out how this industry is going to go forward kind of thing in all its different ways. And a great job was done by one of the first panels that I was part of where it talked about using dynamic analysis for mining companies because everybody, and one of the guys, and I'm paraphrasing this, he said one of the worst things to happen for analysts and for mining companies themselves, for investors, was National Instrument number 43-101. Because everybody thinks that's the be all and end all. There are so many things that economic snapshot doesn't contemplate. And so you've got to look at other things. You've got to look at social license, which is never a part of 43-101, certainly not directly. You've got to look at a lot of different things. You've got to look again at the horses that have been lined up. Do they have the ability or are they going to get the ability to build every single component of this thing that they say they're going to build? Because look, statistically, folks, and most of you out there who've invested in natural resource stocks, especially exploration ones, over the years know it. I sure as hell do. The majority of them fail. They don't ever get to the stage where a mine is built for a lot of different reasons. Now, sometimes you pull a plug on it along the way so you don't lose your whole investment, you do whatever. But this is not an easy business. It's a risky business, and there are a lot of moving parts. So I think that in addition to all of those elements that was mentioned, you've got to look at management, bet on the jockey. Secretariat was the greatest horse that ever lived, but Ron Turcotte didn't exactly hurt things being on top of that horse when he won the Triple Crown in 1973. He probably helped things somewhat. One more thing on jurisdiction. I mentioned Ecuador a minute ago. Um, One of the photos I have of myself from past field trips that I love is I'm standing there with a shit-eating grin on my face. They're supposed to say that on family TV, and I'm holding a length of drill core. It's 40% copper equivalent. I mean, and there's tens of meters of this stuff at this prospect down in Ecuador. And Silver Corp is now the major developer of this thing. Salazar Resources, which made this discovery years ago, is the junior partner now. You know, Silver Corp is in there developing this project. They're in construction right now of what's called the El Domo project. And if you go and look at the history of this thing, from its first discovery to requesting the first permits of significance, I think it was like 7 or 8 years ago. And this is with the pandemic in between, where a lot of governments were shut down for a couple of years and everything else. I defy you to find anything in Canada or the US that has been permitted as fast as El Domo has been in Ecuador. So permitting and jurisdictions can work both ways. And I know a lot of people instinctively want to stick with the US and Canada, all else being equal, so would I. But if something takes 20 years to permit and construct in the US and 6 to 8 years in Ecuador, where you've got better geology and arguably juicier projects, you got to at least give a little consideration to Ecuador or Argentina or some other countries.
Well, that is a great answer. We have one more question. Do you
All
want
right.
one more and then we're closing everything off? I totally appreciate that everyone is so curious and engaging with Chris. Chris, how concerned are you that the current global conflicts will intensify even more? Neil Howe's fourth turning implies that things will get worse before they get better.
Regrettably, I am very concerned about that. I said before I started the slideshow and so forth about Ukraine's sending its surreptitious drone attacks that they somehow smuggled into Russian territory into the Russian air base. You know, the world turned a very bad corner in the early 90s. If you remember, folks, then President George Bush Sr. sat down with Mikhail Gorbachev, essentially signed the death warrant for the old Soviet Union, ostensibly ended the Cold War, and had we had better leadership in the world, including, I have to put the monkey on Europe's back because they've always been in the crosshairs. We could have seen the world to a fair extent after that beat its swords into plowshares and done a far better job than we have done in the 30 plus years since then of lifting 2 or 3 billion people out of poverty, helping with positive development of a lot of still third world countries, where, as I said earlier, a couple billion people on this planet can't flip a light switch. They can't cook on a gas stove or with electric or anything like that. Instead, the notion back then, when George Bush Sr. part of the deal with Mikhail Gorbachev, which also involved the reunification of Germany, was that NATO would not expand. The Warsaw Pact went into the dustbin of history. NATO should have. The fact that it did not has brought us to the brink of another world war because there were people back then and today who simply cannot countenance the idea that military spending would go down, that the military industrial complex, all the intelligence agencies and stuff would lose their power of money and intrigue over the world. That's where we're at. So I must say, and we've got to, live each day not thinking, okay, tomorrow they're going to start dropping nukes. I don't know if it'll happen or not. I don't want to live that way, and we're going to make believe it's not going to happen and pray that it isn't going to happen. But I am not encouraged about the state of things in the world right now. I do hope that Russia and the US chiefly, whether NATO likes it or not, Europe's leaders like it or not, can diffuse the Ukraine situation, and it's going to have to be done fast because Russia cannot itself put up any longer with this. I mean, people don't stop and understand that Putin, if he was not in position of leadership in Russia, and you had, for example, a guy like Dmitry Medvedev or some others, Ukraine would have already long before this been a parking lot. He does not want this war. He would like to be able to end this. And again, going back to the mistake that was made in the early 1990s, had there been the right leadership and the right wisdom in the West, Russia, which culturally is a Christian nation, would have been brought back to where it once was. I mean, you don't have to go back far in history. The czars of Russia, the prime ministers of the UK, the chancellors of Germany, they were all blood relatives for crying out loud. So what could have and should have been done back then was for Russia to be brought back into more than just a gas station for Europe, but a full reintegrated partner in Europe, because that's what the country is naturally, much more so than not. And today, to the extent that China is legitimately a threat, Russia would now be in a place where they would be a buffer and a major ally with us to keep China in check. Instead, we've driven Russia into an alliance with China and Iran and others, and it's to the detriment of everybody except the defense contractors. There's another political sermonette for you.
Chris, you have been fantastic today. Everyone, if you want to connect with Chris, we have an email that will be going out through the Equity Explorers with all his socials. Otherwise, you can go to the National Investor or just nationalinvestor.com. Again, thank you so much, Chris. Thank you for everyone that attended and asked great questions. And we will be posting this for all the people that couldn't make the live for them later.
It's my privilege. Thanks, folks. And make sure if you didn't get a question answered, send them to Callie. She'll get them to me.
Thanks, everyone.